Welcome to Market Day Report, and welcome to a Friday weekend just around the corner. We've got a lot to do between now and the weekend, however. A couple of reports out from USDA coming out 11 o'clock Central Time. We'll see a crop report and a World Ag Supply Demand Estimate report. And then we can start preparing for the weekend after that. And remember, it is a holiday on Monday, not a trading holiday. Markets still trade on Monday, Veterans Day. However, government offices and I believe banks are closed on Monday. All right, let's jump into the markets. Overnight trade for corn. How are we setting up? Penny 3/4 higher on the December at 4.29 1/4. And deferreds anywhere from a penny to a penny and a half higher through the July contracts. What about soybeans? Well, in overnight, down 3.5 on the November at 10.12 a bushel. January down 4, 10.22 1/4. Let's go through wheat, and we'll start with July contracts for Chicago. 0.75 cents lower, 6.04 3/4. What we call Kansas City, down 2. 5.96 3/4, and we call it Minneapolis because it does trade in Minneapolis, but December at 5.98 3/4, down 3 3/4 cents. Cotton futures in New York off 47 at 70.58. Brian Hoops is president, Midwest Market Solutions. All right, Brian, as we get the morning started, flash report.
Yeah, good morning, Tony. Yeah, we had some more private sales this morning. 107,000 107,000 soybeans sold to China, 132,000 beans to an unknown, and then another oddly worded statement, 200,000 metric tons of corn received and then sold during the reporting period, and that's to an unknown destination. So as we saw in yesterday's export sales, a lot of those soybeans will be switched from unknown destinations to China, and that's what the market will assume. So a couple sales of beans to end the week, which was badly needed after only one sale previously this week. It's been a little bit slower week overall for corn and soybean sales compared to last week. And it's just going to be hard to maintain that pace that we've seen here over the last several weeks. So good way to start the morning. Of course, it probably have a muted reaction with the WASDE report at 11. That will be what the trade really focuses on. And then, of course, weather in South America really becomes important in the last half of November and into December of this year. So that's what the trade's going to be focused on. Last 3 years in a row, from the October to the November report, the USDA has raised corn yields. The trade is actually looking for a decrease in the yields in this report. So that's what the trade's going to be focused on here is looking at what happens in this report today. Do we lower corn ending stocks? And I think we can, probably maybe even more than what the pre-report estimates are. Soybean yields also expected to come down, and virtually no changes in the wheat balance sheets in today's report.
All right, you mentioned lowering some expectations there, if you will. We did see Federal Reserve yesterday drop the interest rates again. Will that factor into anything we're doing?
Probably not much today. I mean, it was widely expected. We had known for weeks there was like a 99% chance that they were going to cut rates by a 1/4 point. So not a surprise. I thought if they didn't cut rates, or if they cut it by more than a 1/4, then we could see some sort of a snap reaction and kind of really affect what we're doing here. Now, looking ahead to the next Fed report, that's in 40 days, there's about a 2/3 chance, 70% chance that they will cut 1/4 point rates again. So maybe that will spur some activity, but it really didn't do much of anything. The dollar would react to that rate cut, and it didn't have much of a movement. We hit new highs in the stock market yesterday. We're pulling back a little bit ahead of the weekend, but we certainly could take another run back if those old highs are not that far away, certainly within reach.
And not to mention, I think we hit 1-month highs yesterday in both corn and soybeans. So all right, let's take a break. We'll come back in just a moment. We'll look at livestock futures and what's ahead for the rest of this trading day. Market Day Report continues in a moment. Well, we'll see if cash trade really tightens up today. Again, we've got a couple of reports. Crop production report probably will not have any effect on our livestock markets, though the WASDE report could. and some news overnight that could affect the markets as well. First off, how did we close out the session yesterday? Live cattle futures were higher, 42 higher on the December at 185.82. February up 70 at 187.42. Now for the feeders, they've gained 11% year to date. Gave back some of the gains on the November. Down a nickel yesterday at 247.65. January contract, though, gaining 30 to settle 244.32. Hogs have really been struggling this week and this month. The December contract off 92 at 81.20, but year to date, 19.5% higher. February again gaining 15 at 85.30. All right, Brian Hoops, Midwest Market Solutions. Brian, $1.4 trillion stimulus package announced overnight by China. Could that boost maybe some optimism for our exports?
You would hope so, but it looks like a lot of that money is going to pay down debt that they already have rather than for new stimulus money or trying to revive their struggling economy. And that's why you see crude oil down $1 this morning. So I don't know that it's going to be a major impact on the markets. It seems like they're taking money out of one hand and putting it in another rather than just a new stimulus package. But it is something that has been talked about in the trade so far this morning. As we look at cattle and hog fundamentals, there's a drop in box beef we should mention. Choice was down over $6 yesterday afternoon. Select was down $3.48 on the close. That really is a huge drop in that box beef, and it really hurts packer margins. They went from beginning of the week to a small positive margin of $3 to $5. They're now $57, $59 in the red. So that really hurts the amount of cash that they can pay up this week. We've only seen some bids in Nebraska at 186 and 292, a far cry from the asking prices that are in the 190s. And I'm afraid we're going to struggle to get that, especially with the futures already hanging in that mid 180 range. The only real positive here for the cattle market going into the weekend was steer weights yesterday were down 3 pounds, but they're still over 27 pounds heavier than a year ago. So that's a negative for the cattle market to overcome. And as you mentioned, the hogs here, we talked yesterday morning, marking your low in beef and pork exports. It's going to be a struggle for that front end hog month to get above $84, $85. That's in line with the index, and that's a lot of weekly resistance to overcome unless you have some real positive news, and we don't have that because pork cutouts were down pretty sharply yesterday as well.
And again, waiting to see whether some of that money that's been on the sidelines will roll back in. Where that goes, I guess we'll wait and see. Brian, thanks so much for coming by, and we'll see you back here Monday morning. Brian Hoops, President, Midwest Market Solutions. Okay.